Hello friends, this is Raj Sastry from Raj Option Trading. Today is Feb 22, 2022. Let's take a look at the market and look at the beaten down stocks with a positive gross margin. We look at stocks with a price more than $10 and then let's look at stocks with a price less than $10. So with that, let's jump in and get started. Look, from a market perspective, we are in an up and down market and there's a lot of geopolitical tension. As you can see here, we got Dow Jones Industrial Average coming down. As you can see here, in the futures market, it's getting better. It's down 33. It was much down before. Now it's improving. And then you got here S&P 500. Same story. It's getting better, but still down slightly, as you can see here. And same story with Nasdaq as well as Russell. And look, long-term picture is still intact. If you're a long-term stock buyer or an investor, it's a great time to slowly start buying some great names here. All the indices, Dow Jones, S&P 500, Nasdaq, all doing great in the longer term. Look, every blip along the way is a good buying opportunity. We got here federal rate increase back in 2018. Stock market came down, great buying opportunity. COVID-19, great buying opportunity. So take advantage and start buying some quality stocks as the market is pulling back nicely. So with that, let's jump in and look at beaten down stocks. As you see here, all these stocks are beaten down. They got positive gross margin and volume is more than 1 million shares traded and price is more than $10. So let's look at the short list here. Look, we got a short list here. As usual, keep watching the overall score. I like the stocks with the higher overall score. Higher the better. And we got list of names here. Look at all these stocks here and look at the 1 month performance. All these stocks are down big in one month time frame, as you can see here. So few stocks are jumping higher. As you can see here, we got top of the list here, Amplitude. After clobbering big time, the stock is trying to bounce back. Look, on Friday, Amplitude stock went up by 20%, as you can see here. But at this time, RSI is still 25, which is low, as you can see here. And this company has got enough money. Quick ratio is 3.7. That tells you company has enough money. And they also have a nice gross margin, 69%. Overall score is a little bit low right now. It's just 9, but I think it if you're looking for a bounce candidate, this could be okay. And look, next year revenue expectation is higher for this company, and Altman Z score is 11. Tells you this company has got enough money. And then you got Affirm here. Affirm is a good one to slowly start buying. Look, stock got pummeled, beaten down big time, as you can see here. And this one, as you can see here, this has got a little bit, higher debt to equity. They got some leverage on the balance sheet at the long term. I think it may be okay for a financial type company here, fintech type company. And overall score is very low at this time. But Altman Z score is over 2. That tells you financially it's stable. And they got nice expectation for earnings per share growth as well as revenue growth for next year. So looks like analysts are upbeat on Affirm. It may be okay to slowly start buying some Affirm here. And then we got a few more here. We got New Relic. New Relic got tumbled big time, pulled back heavily after the earnings. And look, this company is they do have enough money. Quick ratio is 2.5, and I think they're doing very well from a sales growth perspective. As you see here, nice sales growth year over year, quarter over quarter, nice gross margin, as you can see here. And New Relic, as you see here, they also have a nice expectation for the future. Look, they got nice 111% EPS growth and 18% revenue growth. That's a good one here. And overall score is also a little bit higher, 24. That tells you it's a little bit safer to buy New Relic at these levels here. Then you got a few more, as you see here. One of my favorite is Mazimo. Mazimo, it's a medical device company. Look at the overall score. It's a 77, highest in here. You could buy some Mazimo into this big beaten down. Look, Mazimo up on Friday with the market tanking. Mazimo went higher, and look at the next year expectations. It's doing very well. So I say, go buy some Mazimo. It's a good one to buy at these levels here. Then as you scan through here, you got a few more here. You got Fastly. I think many of you know this company. Fastly, as you see here, they got nice expectation for the future, but they're a little bit low on the cash. Look at the Artman Z score 1.1, a little bit lower for me. But I think they got short term, they got a lot of money to cover short term obligation. That's why quick ratio is 6.7. You could be okay to slowly jump in here too. And one of my favorite is Confluent. Confluent is a good company here. Look, they got a nice expectation for the future. And right now, as you see here, company stock tumbled big time here. You could take advantage. It's got $1 billion cash in its balance sheet. It can withstand any of these short-term issues. And then you got Roku here. Roku got pummeled big time. Look, Roku, it's got nice expectation of the future and also nice overall score, 67. So I think it's okay to buy some Roku, take advantage of this downturn here. Nice expectation for the future, as you can see here. Nice Altman Z score. I think it's okay right now. And as you look through the Roku here, Roku has got 4.3 as a quick ratio. That tells you they got enough money to cover any short-term obligations here. And debt to equity ratio is also low. That tells you, they are not taking too much financial leverage. They do have enough money. And then you got a few more as you scan through here. We will look at few ones with the higher score here. Look, we got Informatica. Informatica also came down big time, and now it's bouncing in the 1-day time frame. It may be okay to buy some Informatica given it's bouncing after the big fall. And we got a few more here. Keep watching. We got here Shopify is one of my favorite stock. All these type of stocks, hyper growth stocks, are not getting love from Wall Street right now. Look at the overall score. Great overall score here. Shopify is net margin positive company, 81% net profit margin. Stock is pummeled big time here. I would be a buyer of Shopify and slowly buy them. No need to rush. And we'll look at one or two more here. We got CROX. Look at CROX here. Nice overall score, 73. You can take advantage of this here. CROX is a positive net margin company. Company is making money. You could take advantage. Even though they got some debt at the long term, 2.5. Debt to equity ratio a little bit higher. Higher than 1 is not great. But in the short run, the quick ratio is 2. That tells you they got enough money to withstand any short-term financial obligations. So that's a good one here. And then you got a few more here. StoneCo is also a good one here. You could take advantage and slowly start buying some StoneCo. This is also down big time, as you can see here. Now it's just $10. And you could also take a look at few ones. I love Sprout Social. It's a social media type company here. Look, stock got clobbered here, and this one is also a good one here. Right now it's a net margin negative company. Company is not making money. Nice sales growth, as you can see here, and also as you can see, a nice expectation for the future for the revenue growth. You could buy some Sprout Social here. And next one is IAAA. I think this also has a little bit higher expectation for the future, but IAA also has got 26 as the overall score. You could take a look at that one too. So we got one more here. Look, we got GDYN, Grid Dynamics. It also has got a higher score here. You could take a look at that one too. Nice expectation for the future. So with that, let's jump in and look at one more list here. This list has got stocks with the positive net margin, as you can see, positive gross margin, as you can see here, and volume more than 1 million, and price is less than $10. So many of you like to play with the low price stocks here, but be very careful. Go after good candidates. So with that, let's jump in here. These are the stocks with the price less than $10. Keep watching the current price here, all less than $10. And keep watching the overall score as usual. I like the higher the better. I would stick with the little bit higher score, at least double digit. So with that, as you scan through here, also keep watching the next year projection here, earnings per share as well as the revenue growth. As you scan through, take a look at a couple names here, especially the ones with the positive net margin. Look, we got one here, GNOG. This one has got positive net margin. Company is making money, but stock is not getting any love from Wall Street, as you see here. It's down big time, so you got to be watching out and see if it's worth buying here. But right now, fundamental perspective, there is not much going on. And then we got DNA here, which is this one has got a lot of money, as you can see here. They got $1.7 billion of worth of money here. You could take advantage of this DNA here and buy some DNA. Look, future projection is great for DNA. 31% earnings per share growth and 19% revenue growth. I think you could buy some DNA here. Nice Altman Z score tells you company is not going to go out of bankruptcy here. So I say, it's okay to slowly start buying some DNA, take advantage, and go from there. And from a quick ratio perspective, it's 20. That tells you they got enough money to withstand any short-term financial obligations, and they don't have too much debt. And also keep watching the cash here. Many of these companies have got nice cash. You want more cash to be on the balance sheet so they can withstand any financial downturn. And then you got this Chinese company, 2U. As you see here, 2U has got $934 billion of cash here. And they also got 22 as the overall score, which is better. You could look at that one too. I also listed short ratio for you. I know many of you look at short ratio. Many of these companies have got very, very high short ratio. You could try to take advantage of those and see if it works for you. For example, we got Blue Apron here. It's got 50% short ratio. That's huge short ratio and nice overall score, 24, and good expectation for the future. So you could take advantage and see if it's worth buying slowly and accumulating some Blue Apron here. $6 stock. Expectation is $12 in next 12 months or so. And as usual, keep watching few high flyers here and see if it's worth buying. We got here 40 here, EJH, eHome, 60 cents stock, as you can see here. You could take a look at that one and see if it's worth buying. It's got high score, which is 40 overall score, which probably the highest in this list here. But stock is getting not getting enough love here. Market cap is just 20 million, as you can see here. And RSI tells it beaten down. They do have some money, 8.7 is the quick ratio here. And it looks like free cash. Let's see here, EJH. Yeah, they have $52 million of cash on the balance sheet. So you could take a look at that. It's a penny stock. You got to be careful with such names. So with that, I say stay clear with the stocks with the higher cash and also nice projection for the future. That will serve you better. So with that, we'll probably stop here. Thank you very much. Happy investing and trading. Please subscribe.